computer. All right, good morning, class. How are we doing today? So we've got, this is actually your final class that you're going to get from me before we do the review, which is, I'm just going to put up a set of slides on Blackboard for you for a review for the final. I'll probably talk them through a little bit also with a short video for those of you that want to watch and catch the extra hints. You know, when I like stomp my foot or run around the room and say you might see this on the test, I'll probably do that on the review also. So that'll be the last video, but this is the last actual content that we're going to be talking about today. So this first portion is called Legal and Accounting, and I'm just going to go through a very brief overview on some legal things and accounting things that are the benefits of why you would need legal help and why you might need a CPA or some type of accounting help inside of your business. Then we're going to move on to the video after that, which will be other stuff you need to know about, which I'm really going to focus on hiring, and then we'll be done for the day. So legal and accounting. What are the things that are important from a legal perspective? Well, unless you actually have gone to law school and then started a business, legal advice is going to be one of the things that more than once you have to call a lawyer about. And it could be anything from an employee issue to you're getting sued, or you would like to enter a formal partnership agreement with another supplier. It doesn't really matter, but there's going to be all sorts of reasons to call an attorney. And here's kind of, I've listed 4 of the basic one. Like, I want to set up my business. What legal structure do I need? And we'll talk about legal structures on another slide in a little bit of a minute. But do I want to be a C Corp, an S Corp, an LLC, an LLP, a limited family partnership? I mean, there's all sorts of different structures that you can pick. So a lawyer is a great way to talk about those and help you figure it out. You're going to have to draft contracts, whether that is for buying supplies, an employment contract. It won't really matter. There's going to be all sorts of different reasons that you're going to be drafting contracts. HR issues, especially in today's society, I've figured out in business, there's a lot of legal that is involved around human resources. Everything from making sure you're staying in compliance, your hiring practices, etc. And then obviously the one that most people hear about in business, which is defending against lawsuits. You're suing somebody, they're suing you. Doesn't really matter what or how you've gotten into the quandary that you're in, but lawyers are obviously important if you're going to have to defend against a lawsuit. And we're going to talk about each one of these a little bit in detail. So other things that you need to know about, okay? Our lawyers charge kind of through one of 4 different ways. They're either going to charge you an hourly fee. That is literally for every hour you spend with them, you give them a check. They'll keep track of what you talk about. They'll send you a bill that will outline on the bill. We spend an hour talking about an agreement for how to lease a building or lease some fields or whatever you were doing. A flat fee, which is where they'll say, yep, I'll handle this. You have an employee issue. You need to write an employee contract or an employment agreement with one of your employees. They might just say, I'll do that for you for $500. That's just a flat fee kind of billing. A retainer, which is where you actually pay the lawyer every month a certain amount of money, and then he will work against, or she will work against that retainer. And then if they go over, meaning you have more legal hours or legal expense that month than your retainer covers, you would pay the difference. Now, the difference there is the retainer fee entitles you typically to a lower hourly fee, because you might be saying, well, why would I ever do that if I can just pay hourly? If you're paying a lawyer on retainer, if their hourly fee is normally $400, if you pay a piece on retainer and then you go over that retained hours amount, maybe you only pay $250 or $300. So you get a deduction for keeping them in cash flow by paying monthly a retainer fee. And then there's contingency fees. And I know most of you are probably familiar with contingency fees. This is typically where, quote, the ambulance chasers live, right? You don't pay them unless they collect money for you. That's what they will call it in the movies, an ambulance chaser. There's lots of lawyers who do great work on contingency, and there's no reason not to work with someone on a contingency if that's what fits your particular circumstances and your particular case the best. So now let's talk about legal structures, or the different types of legal structures you could have when you are doing a business. Let's just say that you have your own little consulting firm and you go out and you help people figure out how to make their LinkedIn profile look better. So you're going to come talk to someone like me, an old person who's not into social media and doesn't quite understand everything. And you're going to be like, I can help you fix your social media LinkedIn profile. Well, if you work all by yourself, typically a lot of people will just create what's called a sole proprietorship. And it's an unincorporated business. It's just something you're doing by yourself. You don't have a lot of partners. You're not working with a lot of formal agreements. It's a little bit more of an informal business. And so you would just do an unincorporated business and a sole proprietorship, and all the money that you earn will kind of just run through your regular tax return. Then there's a partnership. Let's say that you have now a person who says, you know what? Well, you're an expert at LinkedIn. I'm an expert at Facebook, and I can help people fix their Facebook profiles, and you two decide to get together and form a business. Well, that would be a partnership where there's a relationship between two or more people, and you're going to carry on a trade. In this case, your trade you're carrying on is social media consulting. You're going to each contribute some sort of money, labor, skill, and then you each share in the profits and losses of the business, depending on how many partnership shares you own. Then finally, there's a corporation. And in a corporation, you're going to exchange money or property for stock, for a corporation stock, and you actually get stock, and that would be in a corporation. A C Corp is the corporation that in the USA that we hear about the most. And a corporation is thought of just like a person. It pays taxes just like a person, and then money that you earn from that corporation, you pay taxes on too. So a lot of cases, you'll hear the thing double taxation. You have to avoid double taxation. That typically occurs inside of a corporation or if you've formed a C Corp. However, there are very good reasons in some cases to form C Corps, especially if you're going to try to really grow your business, if you want to take it public, etc., because it allows you to issue a lot more stock. It allows your stock to have, it allows your corporation to have a lot of owners inside of it, etc. So again, consult a lawyer for the best legal structure for you, but that's just a very brief overview of three of them. Now, the most popular ones for entrepreneurs are S corporations and LLCs. So an S corporation is a corporation where you are going to earn money through that corporation, and you will collect all of the income, the losses, the deductions, and they will go through your personal tax return for federal tax purposes, but they only get taxed once, unlike a C Corp, where the corporation is paying taxes on the profits, and then any money you earn, you also pay taxes on. In an S Corp, that's not the case. The S Corp earns money, and then it just distributes the earnings. Doesn't mean you get the cash, but it distributes the earnings on a K-1, and you would pick up the earnings from that S Corp on your personal tax return, whatever portion of the earnings you own. And that's very similar to an LLC. LLCs and S Corps, it's kind of potato to a lot of people that talk about these. They both work the same. And so the difference inside of an LLC is that a member could include a corporation. So in other words, let's say that we have a capital company, Entr Capital, and it wants to own part of another business. It can do that inside of an LLC. So inside of this construction firm we've started, for instance, Entr Capital can own a piece of that new construction firm inside of an LLC. It cannot do that inside of an S corporation. Inside of the S corporation, it has to be the individuals that are owning. So again, consult an attorney as to what the best structure for you is, but that's a very brief overview of all of the different legal structures. Now, contracts. What is a contract? It's a legal, enforceable, voluntary agreement between two or more parties. I actually like demonstrating a contract in class, and I kind of wish we were there, because I would ask, does anybody want to go get me a cup of coffee? And I'll pay you to do it. And somebody would typically always raise their hand, and there's a little bit of banter back and forth on how much do I have to pay. Typically they squeeze $3 to $5 out of me to go get a cup of coffee. And we don't write anything down, we don't do anything, but I pay them, they leave. And I ask the class, what if he doesn't come back and he just keeps my money? And everyone's like, well, you're out your money. And I'm like, no, we actually have a legal enforceable contract, because it was a voluntary agreement between two or more parties. And we had made an offer. I had said, who wants to go get coffee? They'd agreed to do it for a set amount of money. There was acceptance there because they agreed to be legally bound. And then there was consideration. I had actually paid them to go get the coffee. And so a contract is legal if it has offer, acceptance, and consideration. Remember those three things: offer, acceptance, and consideration. So if we were in class right now, I would be like anxiously waiting for someone to come back with a nice hot cup of Starbucks for me. But since we are not, and everyone is homebound, I guess I'll just have to settle for this little one that I made kind of prior to class. So again, just a brief overview on contracts. Remember, they're legally enforceable. They do not have to be written down. They do not have to be written down. However, they're much safer if they're written down and everybody has signed and agreed to terms, etc. Now, employment agreements. This is something else as an entrepreneur that you will run into, an employment agreement. So an employment agreement is a formal agreement that specifies what the relationship will be between an employee and an employer. And it typically includes things like compensation, bonus, benefits. In other words, you're going to get 4 weeks vacation, you're going to earn a bonus based on the net income of the business, and your salary will be $100,000 a year. And they're typically executed for a specific period of time, 1 year, 3 years, 5 years. And most of you understand employment agreements because if you think about it and you think about pro sports, you hear all the time about, well, J.J. Watt just signed a contract for this, and Chris Paul just signed a contract for that. And so when you understand those types of agreements, you think, oh, well, those are contracts. Well, those are really just the same. They're employment agreements. They're an agreement where the Houston Texans are saying to J.J. Watt, we would like you to be under contract to play for us for X number of years. Here's how we will compensate you. You're going to get X salary for every game you play. You're going to get a signing bonus. And oh, by the way, if you make the Pro Bowl, you'll get a bonus. If you can help us reach the Super Bowl, you'll get a bonus. And they also have laid out inside of those contracts their benefits. And so again, if you just think about it from a pure sports perspective, which is what most of us have some sort of exposure to, you kind of understand how an employment agreement works. Those same types of agreements that sports people sign can get signed, and oftentimes with executives get signed inside of a business environment. So that's a brief overview of employment agreements. Now, here's another one that will matter to you greatly, a supplier agreement. A supplier agreement is where some seller says, I will provide you goods and services. So if you're a construction firm, you might sign a supplier agreement with someone that says, you will provide all of my concrete to me, but I get it at a set price, and you have to deliver it at a certain time. So all my concrete deliveries will be between midnight and 3 a.m. in the morning. That gets written into the supplier agreement. And all of the concrete comes at $1 per square foot, as long as it meets a certain mix criteria. So again, you might write that all out in a supplier agreement. And the reason you do supplier agreements is to protect yourself from volatile price changes. So prices go up, prices come down. If you want to kind of make sure that your goods and services have a set price, and or you want to be exclusive with the seller. Let's say you want to have all of the supply from a seller because you want to be able to shut out your competitors. You would do that through a supplier agreement. Again, these are very brief overviews of the major types of agreements that you'll run into. Consult an attorney anytime you're going to formalize one of these. Vendor agreement. Okay, so we've talked about supplier agreements. Now let's talk about vendor agreement. The vendor agreement is really the other side of the supplier agreement. So if you're the supplier, you're actually could be saying, well, I'm signing a vendor agreement. Here's what I'm willing to provide you as the vendor. What am I willing to be obligated for from a provisions and conditions perspective? Yes. On the one side, the construction firm wants a supplier agreement where they're saying, hey, agree to provide me all of this concrete. You as the vendor would say, okay, the other side of this is the vendor agreement, date, time, location. Here's what we would like you to have to do to make this vendor, to make this good. Sometimes you can put all of that inside of one agreement. Sometimes they break them out separately. Regardless, it's going to break down the work to be performed by a contractor. That's what a vendor agreement does. It'll break out the work to be performed by a contractor, typically date, time, location. Those are the biggest things that you'll see in there. Okay, human resource law. We talked about this at the very beginning. Human resource law has evolved over time, right? If you think about human resources, it covers compensation, personal development, fair treatment. Those are the three big things that human resource law covers. And a lot of this has come out of that Civil Rights Act. And so if you kind of track through some of the big human resource law things, human resource law covers sexual harassment. If you're an entrepreneur, I promise you, you will need to understand what constitutes sexual harassment, what does not constitute sexual harassment, and you'll have to be able to provide education and training to your employees to make sure that they are in adherence with what constitutes sexual harassment so that you have an environment where people feel safe. There's the Americans with Disabilities Act, and we all understand what that's for, and you know the great things that it's done as far as accessibility for disabled, making sure that there's proper restrooms, that your work environment has an environment where people can get into and they have an ability to work at a desk, etc. Age discrimination. I mean, age discrimination is something that I'm starting to bump up against, right? I'm getting older, and before I know it, somebody might not want to hire me because they're going to look at me and say, you're just too old. So there's age discrimination, human resource law. The Family and Medical Leave Act. This covers, you know, it started really, I remember the first time I heard about it, my brother-in-law was a executive inside of the Pepsi organization, and they had a child, and he told me he was taking like 6 weeks off. And I was like, 6 weeks off? Wow, Pepsi's really cool. They give you 6 weeks off to, you know, to stay at home with a baby. And he was like, well, no, I'm just using the Family Medical Leave Act, FMLA. And this was years ago. And I was like, what the heck's that? And so Family Medical Leave Act covers all sorts of things. It covers, you know, what happens if you or your spouse has a baby. It covers medical conditions. It covers death. There's lots of things that the Family Medical Leave Act covers. But again, it all comes under this human resources law umbrella. And then the big one, the last big one for human resources law is I'm going to hire and or I want to fire an employee. So what are the things that I make sure I'm adhering to from a compliance perspective if I'm hiring someone? And what are the things that I need to make sure I'm adhering to if I want to fire someone? Do I have proper documentation? Am I about to get exposed to a lawsuit because I walked in one day in a bad mood and I said, you know what, you old person, you need to get out of here because you're just too old to do this job. Well, I think you might have just fired that person and subjected yourself to an age discrimination lawsuit. So understanding how the proper way to let someone go from your organization is a big component of understanding human resources law. So again, this is just a very brief overview of some of the different legal type things that you would run into as an entrepreneur in a business. And if you just kind of think through all of the things on these slides, when you get ready to start your own business, this should give you good coverage. Okay, so now let's move on to accounting advice. So accountants, most people think accountants, you know, count money. I mean, that's what they think about it. They just count money, but they actually do a lot more than that. If you use an accountant when you're getting your business started, they are actually really good also to help you figure out your best business structure, just like the lawyer. Because while the lawyer will understand it from a legal perspective, the accountant understands it from a financial perspective. So from a tax perspective, which is one of the biggest things as you start your entrepreneurial career, you will constantly be wrestling with. How do I make this business as tax efficient as possible? So an accountant helps get you started by determining the right structure up front. They can help you do a financial analysis of your business plan. I mean, you've worked hard, right? You had an idea, you did all your research, you went and figured out there was a viable market, you went and put together a financial plan, which you're gonna either raise money on or use to manage your business to make sure that you're on track with your milestones. Well, an accountant's great to help you with the analysis of that, to say, you know what, some of your assumptions might not be correct. Or to say, you know, you've underestimated what you're going to need for taxes or how you're going to carry your debt. And so they're excellent to help with that. And then in a lot of cases, they can help, you know, if you need some accounting software, you know, can I do this on QuickBooks? Do I need Great Plains? Can I, you know, do nothing at all? Can I just do it with an Excel spreadsheet? But accounting software, an accountant while you're getting started is a great resource to have in your pocket. Okay, we already talked about taxes. That's why I have it last with 2 exclamation points. An accountant is the best for helping you with taxes. Now you've gotten your business started and you enter regular business operation. So wait, what would I possibly need an accountant for now? Well, you know, if you want to hire employees and or independent contractors, they can make sure that if you hire people as independent contractors, they're classified as such by the IRS. What does that mean? The IRS has like a 20-part test that somebody working for your business has to pass to be labeled an independent contractor and to keep you from having to pay payroll taxes somewhere down the line if you get audited. An accountant can help you figure out, yes, indeed, these people are independent contractors. They can help you explain your financial statements. I mean, how much money did I make? I mean, how come I made on paper $100,000, but I don't have any cash in my bank account? which happens a lot in small business. I can't tell you how many small business people I meet with who are like, look, my financials look so good, but I have no money. Where is it? Well, an accountant can really help you understand that the cash is tied up. It's tied up in the fact that your business grew and now you have more accounts receivable, or that you were making payments on debt, which the interest shows up on the profit and loss statement, but not the principal. And so some of your cash has gone to those principal payments. But an accountant can absolutely help you understand that. He or she will provide advice on estimated tax payments. At certain points in your career as an entrepreneur, you're going to realize that you move from being able to pay taxes once a year to having the privilege of paying taxes 4 times a year, and you have to send estimated tax payments in every quarter. If you get there, that's one of those good problems to have, but it's still a problem, and an accountant is a great person to have in your corner to help figure out what those tax payments should be. And then simple things like, I've got to send out my W-2s and my 1099s at the end of the year. I know you guys all get them. If you've had any job at all, you have gotten a W-2 or a 1099 form which says this is how much money you made. Accountants are typically consulting with businesses to help produce those. And then at the end of the year, they're going to help you close out your books and create all your financial reports. How did I do? Did I make money? Am I doing well? Send a packet of information over to the bank if you have any bank debt to help you meet your covenants, etc. So an accountant can help you do all of those things while you're actually in business. So now you understand how they work with you to start your business, how they work with you while you're in business, while you're growing your business. This is the next thing that an accountant really helps you with. While you're growing, I need to get another truck. Do I buy the truck or lease the truck? An accountant will help you understand the differences between the two and how it could impact your cash flow, impact your business, impact your debt structures, all of things which would matter depending on how your business is financed. They can help you prevent getting audited by the IRS because they're going to make sure that your tax returns are put together properly. They're going to help you do proper planning. They're going to make sure you're doing your estimated tax payments, all of those kinds of things as your business is growing. They're going to help you as you grow your business to do financial forecasts. I want to grow by 30%. Wait, what does that mean for me? How much cash do I need? How do I finance that growth? Because you can't just say I want to grow. You actually have to have cash to grow. You have to hire more employees, or you might have to have more in accounts receivable, or you may need more inventory. In any one of those cases, they're all going to require cash, and an accountant can help you do the financial forecasts to keep you from wondering where to go from there. And then finally, they can provide advice and resources if you've decided you want to sell your business. They're going to be great on helping you put together, here's an idea of what your business is worth, here's your net income stream over the last few years, etc. But bottom line is, I'm trying to give you an understanding of how an accountant can help. So again, brief overview of legal, how a lawyer helps your business, and accounting, how an accountant helps your business. So that's everything we have for video 1. I'll be back to you in a few minutes with video 2. Have a great day.